Hi, good afternoon, everyone. Today is the 16th of December. My name is Gerald, and I'm very happy to be hosting today's weekly market review. Sunny is away for his year-end holiday, so I'll be doing today's session by myself. Okay, just before we start, the usual disclaimers that today's sharing is for information purposes only and should not be taken to be financial advice. If you find our weekly market review helpful, do leave us a review on Google. And if you're wondering how you can join SIAS as a member, you can scan this QR code or go to the website sias.org.sg/membership. And as a SIAS member, you'll be able to access various online resources as well as investor education programs. Okay, so I will start with a recap around what happened in the markets over the past week. Firstly, we see that the markets were mixed after the S&P 500 reached a record high. It closed down 0.6% for the week. But there is a divergence in performance here that we see, whereby the Nasdaq was up by 0.3%, while the Dow Jones was down by 1.8%. Within Nasdaq, if you follow some of the names closely, you have realized that names such as Tesla, such as Alphabet, which is Google's parent, have been doing exceptionally well, and that's actually helped to lift the sentiment towards the tech stocks. Closer to home, we also see strong performance by the STI, now closing above the 3,800 levels, following a 0.4% gain in the past week. The key economic data point that came out last week that everyone was looking out for, including ourselves, was the US inflation data. Here we see the US Consumer Price Index data and how that's changed on a month-on-month basis. And effectively, it has been increasing by 0.3% over the past 4 months. So this is a number that is broadly in line with expectations. And with that, investors have increased their likelihood of a potential rate cut coming through in the December meeting. Okay, so this is what we see here from the CME Fed Watch 2 for the meeting that is coming up next week on the 18th of December. What we do see is that the probability of a rate cut is now at 96%. Okay, and then if you look into 2025, currently the expectation is for 2 further rate cuts in 2025. Okay, for the STI, I mentioned earlier that we saw a slight gain, and it has actually outperformed the S&P 500 in the past week. Amongst the names that did well, Yangtze Shipbuilding with another 7.1% gain, following the exceptional performance in the previous week. And I'll share more about Yangtze Shipbuilding later as part of our year-end recap. Outside of Yangtze Shipbuilding, we also saw strong performance by the banks. OCBC was up by 2.2% and UOB was up by 1.3%. Okay, in terms of the bottom performers of the STI, we see a number of the Jardine-related names here, with Jardine Matheson down by 6%, Hong Kong Land 3.6%, and DFI Retail Group down by 3.3%. Okay, so what I'll do for today's session is to actually look at some of the stocks that have done very well within the STI this year. So the STI had a very strong year, up by 18%. This is as of 13th of December 2024. But even then, we see that there have been stocks that rose by more than 30% so far this year. Okay, so I managed to find 3 names. The first, Yangtze Shipbuilding, up by 87% this year. DBS up by close to 45%. I know many of you follow DBS, and there's a name that I'll talk about a bit more later as well. Last but not least, we have got SETS, which is up by 33% year to date. Okay, so what I'll do is share some of the reasons that actually led to this companies having a very strong share price performance in 2024. Okay, I'll start with Yangzijiang Shipbuilding. What we see here is that from about 150 at the start of the year, it has soared to about 290 as of the 13th of December. And what we'll try to understand is what actually led to this surge in its share price. Okay, so what I do see is a very strong order win momentum. As of the 7th of November, it has secured 11.64 billion US dollar worth of contracts. And more recently, it announced another 2.6 billion US dollar worth of contracts, which would bring its total order wins this year to above 14 billion. Okay, if I compare that to its target at the start of the year, it set itself a target of 4.5 billion. So that surpassed its target by a very significant amount. And if I were to compare with the order wins in the previous year, this 14 billion of new order wins would also be exceptional. Okay, even if I were to look at the 2 good years that it previously had, in 2021, it achieved 7.4 billion of orders, and 2023, 7 billion of orders. So effectively, it has doubled its previous strong order win year. Okay, so with that, the order book of Yangzijiang has grown to 22 billion as of November 2024. And what this means is that as these orders gradually get delivered over the next few years, as they continue to construct the vessels, they will recognize this as revenue, and that effectively provides the revenue visibility for the company over the next few years. Okay, so what is driving this strength in the orders? Effectively, a lot of it is driven by oil tankers and gas carriers. For oil tankers, we see a move towards a fleet renewal. And for gas carriers, that is actually driven by the very strong growth in shale gas production, which require these vessels to be able to transport them. Okay, so the demand for these vessels are expected to grow based on the industry forecast, where we see that the LPG carriers and LNG carriers are expected to have the strongest growth in the coming years. Okay, so in terms of how that is reflected in Yangzijiang's earnings, we see a very strong growth in profit in the first half of the year. The revenue grew by 15% year on year to 13 billion in the first half of this year. The gross profit margin improved to 26.7% from 18.6% in the first half of last year. And with that, the net profit actually soared to 3 billion Chinese yuan from 1.7 billion last year. So that represents a 77% increase in the profit in the first half of this year. Okay, so if you're wondering, then what is the current market expectations of Yangzijiang? Given that the share price has gone up to $2.88, based on the latest average target price that I see, that is at $2.47. So this represents the average target prices that analysts covering the stock have. And what this means is that given the share price has gone up, there is now potential downside of 14% basing on this analyst estimates. Okay, we see that in the dividend yield as well, given that the share price has gone up by quite a bit. The current expected dividend yield for Yangzijiang is now at 2.4%, which is below the historical average. Okay, next I'll talk about DBS, also a name that has done very well. At the start of the year, it was trading at about $30 per share, and it has gone up to about $44 as of 13 December, and that represents a 45% increase in its share price. Okay, so we also see a very strong profit growth for DBS. If you are to look at the third quarter net profit, that was a record quarterly high of 3 billion Sing dollars, and that represents a 17% increase compared to the previous year. Okay, we see an improvement in profit in terms of the total income that is able to generate. So that actually flowed through to the bottom line, and we will look at what are some of these drivers of the improvement in the total income. Okay, so first and foremost, we see that the net interest income has actually been fairly resilient, even though interest rates have been coming down. Okay, so if I were to look at the group net interest margin, that was at 2.11%, and that compared to the first and second quarter level of 2.14%, would be fairly stable. Okay. So in the first 9 months of 2024, group net interest margin of 2.13%. And once again, that is pretty much stable from the 9 months of 2023. So even though there were concerns that with the Fed interest rate cut, with interest rates coming down, the net interest margin would be under pressure, we have actually seen that it has held up fairly well. Okay, but more importantly, we have seen a very strong growth in the fee income of DBS. In the 9 months of 2024, that was at 3.85 billion, representing a 26% increase compared to 3.05 billion in the 9 months of 2023. If I were to break it down, a very strong growth was seen in the wealth management fee income, which actually rose to 1.67 billion in the 9 months of 2024 from 1.13 billion in the 9 months of 2023. Okay, and with that, we have seen an increase in the dividends announced by DBS, 54 cents per quarter over the past 3 quarters, and that is higher compared to what we see in the previous year. Okay, looking forward, what the company has shared is that the group net interest income for 2025 is expected to be around the 2024 levels. So even though they're expecting that there will be a slight decline in the group net interest margin, this is expected to be offset by loan growth. Okay, and with the stability in the group net interest income, the pre-tax profit is also expected to be close to the 2024 levels, and that is helping investors to gain some visibility around the earnings for DBS into 2025. Okay, so once again, DBS share price has gone up by quite a bit to $43.74 as of 13 December. But based on the average target price of analysts, that will be at $45. So analysts are still saying some slight upside to DBS share price. Okay, and if I were to look at the dividend yield of DBS, currently at 4.9%, which is still quite close to the historical average dividend yield of 5%. Okay, last but not least, I'll talk about SIAS. Started the year at about the $2.80 level, and as of 13th of December, the share price is $3.67, even though the share price reached as high as $4 at some point in November. Okay, so once again, we see a very strong earnings growth for SIAS. The fiscal year end for SIAS is in March. So this represents the second quarter earnings for the quarter ending September. So the net profit was at 70 million, and that represents a very significant growth of 47.5 million compared to the second quarter profit last year. Okay, we see strong growth in the volumes that it is processing, which leads to an increase in the revenue recognized. And with that increase in profit, SIAS has resumed its dividend payment and announced an interim dividend of 1.5 cents per share for shareholders. Okay, so if I were to look across the different businesses, we see revenue growth across the different key businesses. In case you have lost track of what are the key businesses of SATS, cargo is now 50% of its revenue, followed by ground services at 27% and aviation food at 16%. Okay, so what we see for revenue for cargo is that it grew 15.7% in the first half of FY25 compared to the previous year. Okay, if I were to look at the other businesses for food solutions, effectively, we saw very strong growth here of 29% in the first half of this year, and that actually represented a strong performance for the company across the different businesses. Okay, so what is driving this improvement in revenue? We see an increase in the flights handled by SATS, increasing by 5.5% in the first half of the fiscal year. Okay, and then likewise, we see an increase in the cargo tonnage that was being handled, amounting to 17.5% increase. And in terms of the meals that were served in its aviation business, that represented a 26% increase. So this rebound in travel demand has actually led to an improvement in the volumes that SATS is currently handling, as we can see from both the flights handled, the meal served, and also being partly reflected in the cargo tonnage. Okay, so overall, I mentioned that the improvement in business volumes has led to an improvement in the revenue of SATS, and that has actually translated down to the bottom line of SATS, where we see an improvement in the profitability. The profit after tax and minority interest was 135 million in the first half of the fiscal year, compared to a loss that was incurred in the first half of the previous year. So clearly a turnaround in the profitability of SATS, which led to the strong share price performance. Okay, so we see this as a sequential basis here, where quarter after quarter, SATS profit has actually improved. In the first quarter of the last fiscal year, it was still loss-making. It turned around to profitability in the second quarter of last year. The profitability continued to improve, such that by the second quarter of fiscal year 25, we are looking at a 70 million quarterly profit. Okay, so the share price of SATS has gone up by quite a bit, and currently the average share price target of analysts is at $3.34. So that represents that analysts are now having a more cautious view on SATS based on the target price. Okay, if I was to look at the dividend yield of SATS now at 0.8%, given that it just announced an interim dividend of 1.5 cents. Okay, so with that, I've done the recap of the 3 best performing blue chip stocks in Singapore. They have done exceptionally well this year. And if you're wondering what is there to look forward to for the coming week as we wind down the year, just a few things to keep a lookout for. We have an upcoming 6-month T-bill auction on the 19th of December. And more importantly, we have the final US Federal Reserve meeting on the 18th of December. So that is probably the last major economic event to be keeping a lookout for. And we'll see whether the Fed really cuts the interest rate as expected in the upcoming meeting. Okay, so with that, thank you for joining us for today's weekly market review. I hope that you had a fruitful year in the investing sphere as well. And I'll look forward to seeing you once again in 2025. Thank you so much for joining us today.